What if I told you that the biggest obstacle standing between you and the wealth you want isn't your job, isn't the economy, and isn't your lack of a hot stock tip? What if I told you that the biggest obstacle is that the very brain inside your head is a pathological liar? Every single day, it whispers in your ear. It tells you that you're smarter than average, that you see the patterns everyone else misses, that you can predict the future, and that you, yes, you, can beat the market. And honestly, that little voice, that confident, reassuring, ego-stroking voice, is absolutely killing your returns. Welcome to Thrive with Tima, the show where we decode the neuroscience of wealth to help you build your net worth. Today, we're exposing the most expensive lie you tell yourself. So, why is your brain, this incredible supercomputer, so bad at making us rich? It comes down to a powerful cognitive flaw called the overconfidence bias. This bias is our brain's tendency to be more confident in our own abilities and judgments than is objectively reasonable. Think about it. Ask a room of 100 people if they're an above-average driver. And I guarantee you, more than 90% of them will raise their hand. That's statistically impossible, but it feels true to every single one of them. This is turbocharged by something you might have heard of, the Dunning-Kruger effect. In simple terms, the Dunning-Kruger effect means that the less you know about something, the more you think you know. You don't just not know, you don't even know what you don't know. Your brain fills in those massive gaps in knowledge with pure, unadulterated confidence. See, your brain wasn't designed to accurately calculate the PE ratio of a tech stock during a volatile market. It was simply designed for survival. It was designed to make quick, confident decisions to keep you alive. I don't know, is that a predator in the bushes? Yes, then run. It creates simple, confident narratives to make a complex world feel predictable. But here's the problem. The stock market isn't a predator in the bushes. It's a complex, adaptive system governed by statistics and mass psychology, not simple stories. And when you bring your storyteller brain to a statistics fight, what happens is that you lose. Okay, Tima, that's interesting science, but how does this actually show up in my bank account? Or rather, why isn't it showing up? First, it leads to overtrading. Your overconfident brain sees a stock dip and thinks, this is the bottom, I'm a genius for buying now. Or it sees a stock go up and thinks, I knew it, I better sell and lock in my genius profits. You feel the edge to do something, so you buy, you sell, you buy again. And every time you do, you're getting eaten alive by trading fees and taxes. So basically, you're not investing, you're just generating commissions for your broker. You feel like a Wall Street wizard, but you're actually just a fish splashing around and attracting sharks. Second, it causes a catastrophic failure to diversify. For example, you find a company you love, maybe it's Tesla, maybe it's some new crypto project. Your brain tells you, this is it. This is the one. All my other investments are chumps compared to this one. So you put a dangerous amount of money into this one and absolutely certain it's the next big thing. So you've stopped being an investor and you've become a fan. And putting all your eggs in one genius basket is the fastest way to end up with no eggs. And finally, it makes you ignore sound, time-tested advice. You hear financial experts talk about long-term patient investing in a diversified portfolio, and your brain yawns. How boring, how average. I'm not average. I have a special insight. So you dismiss the proven path to wealth in favor of your own brilliant strategy that almost always is just a gamble disguised as genius. Okay, our brains are lying, confident machines that are sabotaging our wealth. It sounds bleak, but it's not. Once you know the code, you can write a new program. Here are 3 concrete tools to instill the most profitable trait an investor can have, which is intellectual humility. Tool number 1 is the decision journal. This is non-negotiable. Before you make any significant investment, you take out a journal, physical or digital, and you write down 4 things. First, the decision. For example, I am buying $5,000 of XYZ stock. Second, the why. The story you're telling yourself. For example, I believe their new product is going to revolutionize the industry and the CEO is a visionary. Third, the expectation. For example, I expect this stock to rise by 30% in the next 6 months. Fourth, the emotional state. For example, I feel excited, a little nervous, but confident. Then you close this journal. In 6 months, you come back and you review it. You force your current self to confront your past self's genius prediction. When you see in black and white how often your brilliant stories were wrong, it systematically dismantles your brain's overconfidence. It's humbling and it's incredibly effective. Tool number 2, the 3-day rule. You get a hot tip, you read an amazing article, your emotional, impulsive brain is screaming, go. Instead, you do nothing. You activate a mandatory 72-hour cooling off period for any major non-automated investment decision. This creates a circuit breaker. It allows the initial emotional surge from your limbic system to calm down and lets your prefrontal cortex, the slow, rational thinking part of your brain, to actually show up to the party. 9 times out of 10, after 3 days, the genius idea will look a lot more like the risky gamble it actually is. And tool number 3 is the humility of the index fund. For most people, the single best investment strategy is to regularly buy a low-cost broad market index fund, like one that tracks the S&P 500. Why? Because buying an index fund is an explicit admission. It is you looking at the market and saying, I cannot beat you. I don't know which of these 500 companies will win, so I'm just going to buy a tiny piece of all of them. Your ego basically hates this idea. It feels like giving up. But here's the data. Over any 10 to 15 year period, more than 90% of professional, highly paid, genius fund managers fail to beat that simple, boring index fund. So admitting you can't beat the market is the single best, most intelligent, data-driven decision you can make. It's the ultimate Neuro-Hack. It makes you richer than 90% of the people who think they're geniuses. So humility, it turns out, is your superpower. Your brain isn't your enemy. It's a powerful tool that's just running on default survival software. But you have the admin password, so you can install new programs. You can use a decision journal to ground yourself in reality. You can use the 3-day rule to separate emotion from action. And you can embrace the strategic humility of the index fund to outperform the overconfident crowd. Your brain doesn't have to be a liar. You just have to know its code to use it properly to build the life and the wealth you deserve. If this episode blew your mind, do me a favor and hit that subscribe button because we're just getting started. Thank you, honestly, guys, for joining me on Thrive with Tima. Now go be more profitable than your own brain thinks you are. Love you, mean it, Tima.